Alright guys, what's up? Making a quick video here. Did not have time to make did not have time to make it at my house, so I'm gonna make it here. This is a quick live trading recap on how I made $500 and I think $600 or $500 something dollars. So let's begin. So we came into the market pretty bearish. So I think, what was it? It was Friday. So we were right here. Oh, here we go, right here. Friday, 8 a.m. We were pretty bearish a little bit. I didn't really know what my bias was going into the day. We were kind of bearish, kind of bullish. Kind of bullish, kind of bearish. Didn't really know what the market wanted to do. We were kind of in a consolidation range, as you would say. Consolidation range. We didn't know what we wanted to do. We were kind of just up, down, up, down, up, down. Right? So me knowing that, I wasn't really going to take a trade, honestly. Because I knew Fridays, specifically Fridays is not really a day where there's high volatility, unless we get like red folder news or, you know, stuff along those lines, you know, news, Trump tweeting, going crazy. We usually don't get a lot of volatility, and I like to trade on volatility because I don't need price thinking it's gonna go here, but then we really actually don't have enough orders to go there, and we actually start going the opposite way. I hate that stuff. So I try to avoid days where there's no volatility in the market, and Fridays and Mondays are usually those days. So we were kind of going up and down. I mean, I guess we kind of swept out liquidity up here per se. You know, I guess. And then we started trending down. So I still saw us trending down. And I saw it as, okay, this is gonna be a low risk day if I was to take the trade. Now, fast forward a little bit. So market is open at this point. Let's scroll down to the 15 minute. So we open right around here. We're already sitting in an hourly fair value gap. Sorry, let me rewind. We're in an hourly fair value gap. I marked this out pre-market. We're in an hourly fair value gap in this big downtrend that we're in. So we're still in a downtrend. This is a 4-hour fair value gap. This is an hourly fair value gap. So we tap into this hourly fair value gap here. And as you can see, we're kind of chopping around a little bit. So I see that we're chopping around, still not really willing to put in a trade until I saw us kind of break out of this. So we were still bearish on the day. We were still pretty bearish. I mean, on the week, sorry. We were pretty bearish. We went right back into this hourly fair value gap. So I'm thinking, if anything, I'm looking for shorts. This is not a day where we look for any buys. We're looking for shorts. So I think I mark out something else too. Yes, I mark out this 5-minute fair value gap. You see this 5-minute fair value gap? I marked this out because I see that if price is gonna not have a lot of volatility on the day, which it pretty much didn't really, we're pretty much just gonna be we're pretty much just gonna have simple basic confluences that the market is probably going to respect, and we're just going to probably make a mini move. Turns out in the grand scheme of things, I was kind of wrong, because later on during the day, we actually made a big move to the downside. But when the market first opened up, we were pretty much chopping around a lot. So let's zoom more in. So I mark out this 5-minute fair value gap. We tap in, boom, and then we started displacing right out. I didn't really see a 1-minute inverse fair value gap confluence because there was no volatility. So I kind of just took my trade off of this 5-minute retracement, tap in, closure outside. Simple. Kept it nice and simple. We started displacing down, all the way down. I put 5 contracts in, all the way down up to here. No, sorry. We displaced all the way down here, and then we kind of paused a little bit. You see these rejection candles here? We kind of paused a little bit. So me, my impatient self, like I said, I'm still a work in progress. I still have emotions. I still have shit that I gotta handle. Me, I dragged my stops all the way down here because I wanted to confirm that it was at like $700 at one point. $700 profit. I wanted to confirm it. I want to at least confirm most of it. So I dragged my stops all the way down. We pretty much retraced back into it. Boom, taking me out. I think I put my stops right here, and it took me out. Boom. And then guess what? It continued lower and lower and lower. This is why you do not and it took out my target. This is my target right here. So I could have made double of what I made. I could have made $1,000, but instead I settled with about $600. This is why, and I'm talking to myself here, this is why you don't drag your stops too early. Yeah, you can lose all the profit you made, but at least if you drag it to break even, or at least if you have a break even checkpoint, at least you're not gonna lose money on the day, you know? And honestly, you're gonna win more than you lose if you know what you're doing. So it's best to let the market do what it does, you know, give it room to breathe, let it do what it do. Me, I didn't want to do that. I waited until market kind of rejected a little bit, and I dragged my stops. I was confirming that profit, and I didn't really care. But that is not the approach to go by. You shouldn't want to do that because, as you can see here, and as many times, we displaced fully into take profit, which was right here. We displaced into take profit, then we jumped up, came back down into it, jumped up, consolidated, and then we took out another target that I had, which was, I can't really think of what it was. Actually, no, I think we kept going lower, as a matter of fact. We kept going all the way down. Now that I remember, let's just fast forward all the way. Yep. We kept going, chop. Lunch came, went up a little bit. I guess we retraced into maybe a 15, 30, whatever the case may be. And then we displaced all the way down here. So obviously I'm not going to keep my trades after about here, right here. But this is, you know, telling that, yeah, the market is going to do what it does, and have confidence in your setup, because it'll probably do that and more. And don't always chase the market, you know. This goes back to the first rule. Don't be greedy. Don't chase the market. And yeah, have confidence in your setup, and you will make it. So yeah, if I log in, let's log in here just to show you guys. Then ain't no cap in my wraps. Details. Yep, $560 on the 20th of Friday. So I didn't trade all week because it was just bad price action. Tuesday I thought it was gonna be kind of good. Turned out I was wrong. Wednesday same thing. Thursday same thing. Friday we caught that banger trade. So hopefully next week is a little bit better of price action. And yeah. That's what happened. So I made $560 on the day. I did just deposit money into my live account, so I will be starting to trade live. So whoever's tuned in, stay tuned. You are going to see me grow my live account from $1,000. I'm gonna try to get it to $100,000. It's not gonna be quick. It may not even be this year, honestly. You may see that sometime next year. I'm gonna try my best to not blow the account, not blow my $1,000. Remember, this live account, this is going to be live, hard-earned money that I have made at my, place of employment, other endeavors that I'm into. This is hard-earned money. This ain't prop firm money. Prop firm money, yeah, you pay a little bit of a fee, $50, $100, just to have access to capital. I'm using my actual capital to trade money. So there's a big risk involved. So it could go well for me, it could go bad for me. I have confidence in myself and my skills, and I think it can go well. But I can't forget about my key principles, and my key principles is the reason why I'm still alive today. And neither should you. All right, so let me call this a video, and I will see you guys when I see you guys. Deuces.